It gives me great pleasure to welcome you to this very prestigious forum to discuss a very important topic, the role of Islamic capital markets in economic growth. I am Mustafa Adil, the Head of Research and Product Development at Thomson Reuters, and I will be the moderator for the session today. First and foremost, let me take this opportunity to introduce our panel of distinguished panelists. We have with us Mr. Khalid Hawlandar, the Global Head of Islamic Finance and GCC Financial Institutions for Moody's Investors. We have Mr. Zain al-Islam Zain al-Abdin, Executive Director of Islamic Capital Markets for the Securities Commission of Malaysia. We have Dr. Alberto Brignoni, the founder and managing partner of As-Saif, the first Islamic consultancy in Europe. We have Mr. Richard Thomas, Senior Advisor to the Board of Gatehouse Bank PLC and Chief Representative of Gatehouse Bank Kuala Lumpur. And last but not least, we have Mr. Abdullah Awar, the Chief Executive Officer of Dubai Islamic Economy Development Center. Gentlemen, thank you for being with us today. In terms of overview, we will start the session with me providing a few opening remarks that will really lay the context for the discussion and identify some of the challenges with the topic. I will then hand over to each of my panelists who will present a brief introductory remarks or presentations related to the subject. We will then have a panel discussion, which we will lead. And finally, towards the end, we will open up to the audience for a Q&A session. The role of Islamic capital markets in economic growth. Islamic capital markets in general are a pivotal source of economic growth for countries that move from along their development cycle. As countries mature and the needs of investors and the needs of those who require capital increase, capital markets provide a source of structured, specific instruments that cater to their specific requirements. If we look at capital markets in the developed world, you'll find that you have a wide variety of instruments. And these capital market instruments are used to fund everything from infrastructure projects to trade finance to SMEs to venture capital, and also specialist sector financing, which can include everything from agriculture to renewable energy to oil and gas to real estate and so on. So, what is the state of Islamic capital markets today? To address that, we need to look at the wider capital markets, both conventional and Islamic, in OIC countries and Islamic countries. Over the course of the last decade, a number of these Islamic markets have moved from the developing to the emerging markets phase of their development. What we see is that most capital markets in these jurisdictions are simplistic, with the vast majority of lending being done through either financial banks as financial intermediaries or very limited structured debt instruments. And Islamic finance is no different. I mean, when you consider that total Islamic banking assets in 2013 was $1.6 billion, and you assess that 75% of that rested with Islamic banks, you can understand why the industry is developed in this way. The most prominent instrument in Islamic capital markets, which is Sukuk, mimics very closely debt instruments that we see in the conventional space. But the needs of people that require capital and the needs of investors will evolve as these markets mature. And for that, instruments also need to mature. So, although the state of development for both conventional and Islamic capital markets in these countries is very similar, the challenges are very different. In the conventional space, as markets develop, it is very easy for institutions to import and implement products and structures that have worked well in the developed markets. It is very easy for regulators to be able to monitor and regulate these instruments. However, the challenge for Islamic capital markets is very different. We need genuine product innovation to be able to provide the next generation of instruments that are required for a mature capital market that is helping to fund the economic development of the real economic sectors of each country. So who will derive this growth or innovation? What is the role of regulators, policymakers, and governments in general? Is it a reactive role where they simply take the lead in regulating instruments once they have been introduced? Or can they play a more proactive role in actually supporting and facilitating the development of this? And of course, most importantly, what is the role of the institutions themselves? We have seen in the past few years a number of innovations in sukuk. A number of institutions launched recently perpetual sukuks, which is a great innovation that has been implemented to meet the needs of these institutions and investors who require diversity in their investment portfolios. But when we look closer, we see that these instruments were launched by some of the largest Islamic banks in the world. These are institutions that have significant resources at their disposal that they're able to utilize to develop these products. And they have a track record and a credibility in the market that allows these products to be more easily accepted by investors. Will the smaller institutions or the niche players that really require funding from capital markets be able to do the same? To address some of these questions and others, it gives me great pleasure to now turn to my fellow panelists. And I would like to start by inviting Mr. Abdullah Lawar, the Chief Executive of Dubai Islamic Economy Development Center, to provide his opening remarks. Thank you very much.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, distinguished excellencies, distinguished ladies and gentlemen. It's my pleasure to be here today with you in the last panel of the World Islamic Economic Forum. And what an interesting panel, I may add, the topic of the role of the Islamic capital market in the economic growth. A component which we consider, of course, a core part of Dubai's own strategy in transforming itself as the capital of the Islamic economy. Even before the emergence of the Islamic economy that has been fully grasped and appreciated by market forces, deliberations on the role of the capital markets in economic growth has been generated significant conversations around the globe. While some believe that economic growth leads to the development of the financial sector, based on evidence that where enterprise leads, finance follows, others believe in the bidirectional theory, pointing out that finance and growth are directly proportionate to each other. Financial development causes the economy to grow, and economic growth triggers the financial sector to advance further. Lately, the Islamic capital market has registered steady and significant growth, and I'm sure later on you will be hearing a lot of statistics on that, and it has achieved its rightful place on the global financial landscape. Conceptually speaking, however, the Islamic capital market is based on the Sharia-compliant financial system that aims at achieving real economic growth, reducing inflation, and lowering unemployment. And we have seen these taking place in practice. Some economists have found that the Islamic financial system based on an interest-free banking structure is in a prime position to achieve its monetary targets, while others do not believe any evidence exists of stability in the interest-free banking system. Our experience in the UAE drives us to support the bidirectional theory. The development of Islamic capital market is enhanced by the country's economic growth on one hand, and the latter is sustained where we continue to build on the strength and mitigate performance risks of the Islamic financial system as a whole. We believe that virtuous cycle of the virtuous cycle of the Islamic banking development and investment will be created as Islamic banking increasingly stimulates an entrepreneurial response in productive sectors and promotes even more investments in the real economy. At the same time, greater investments in the UAE will facilitate the Islamic banking in the country and develop it even further than what it is today. Ladies and gentlemen, the Islamic finance sector is not only limited to Islamic law or Sharia-compliant law, but in the broader context focuses on the social, moral, religious, and ethical welfare of society as a whole. This is the core difference between the Islamic finance instruments and sector as a whole versus the conventional. Islam also considers an interest-based financial system demanding to mankind, as such system allows the rich to get richer while the poor becomes poorer, ultimately leading to an imbalance in the society which the Islamic principles usually frowns upon. So Islamic finance instruments ensure that this is not the case. On its part, Islamic finance is a value-based system that is built on the highest moral ethics such as universal brotherhood, collective welfare and prosperity, social fairness and justice as well. The main pillars of the Islamic finance prioritize profit and loss sharing, asset-backed financing, and social welfare as well. Throughout the decades, as society grew more unbraced and modern and the economy flourished within the creation of trade and new products and services, the environment became increasingly damaged, leading to the rise of social inequality and, as a result, poverty. And Islamic finance, as an alternative, provided proofs that it could be a viable alternative that will ensure that these issues are resolved by utilizing these instruments. Therefore, the Islamic capital market should impose good corporate governance as an essential step forward. The higher the quality of the implementation of good corporate governance, the greater will be the public confidence achieved, ensuring that markets' resilience and robustness in the long term is abided by. This calls for the applying of well-designed regulatory framework that will appreciate incentivize market participants for their good performance. Furthermore, risk assessment of products and markets is also is important for regulators, issuers, and investors alike in the Islamic capital arena. Appropriate techniques should be developed for risk assessments and products. Regulatory bodies need to build this internal capacity, and effective methods should be created to educate investors on the risks and returns involved in Islamic capital market products. This is where the role of a standard setting bodies also come into play. A proper and strong legal foundation for the Islamic capital market is critical today, ladies and gentlemen, to achieve market efficiency as it continues to minimize the uncertainty and consequently improve the public confidence. The potential for growth of the Islamic capital market is very high, but this cannot be realized by private demand alone or goodwill alone. Active regulatory support is also mandatory at the same time and is important at the same time. The development of the Islamic capital market requires comprehensive support covering human capital development, improved legal environment and supportive infrastructure, well-developed risk management, and finally market expansion. All of these are elements that we would like to promote within our strategy of Dubai, the capital of Islamic economy. Despite the successes achieved so far, there are still opportunities to do more. Researchers, educational institutions, regulators, bankers, and financial institutions, lawyers, and other market participants all play an important role and would work. We would like to see them work actually closely and cohesively towards these goals within their respective domains for the ultimate benefit of the Islamic economy. Ladies and gentlemen, I think I'll stop there and allow my fellow panelists also to say a few words on this topic. Thank you very much.
Thank you very much, Khalid. I would now like to invite Khalid Hollander to come to the
Assalamu alaikum, and my thanks to the WEEF for the opportunity to speak today, and my thanks to the audience for staying. Moody's, in its mandate, is focused on investor transparency and education. And in this role, as global head of Islamic finance, I have the good fortune of covering both the Islamic banks from Turkey all the way to Malaysia, as well as the Sukuk markets. And I think this year, as we've seen, has been a very important year for Sukuk markets, where it was a global phenomenon. But to the topic of capital markets and economic growth, there are some very obvious drivers of economic growth. Use of technology improves economic growth, and education, of course, improves economic growth. But an efficient financial system is very important for efficiently allocating capital and cash from savers into productive investments. And that really is part of the core of Islamic finance. Now, an efficient financial system, efficient markets, can very efficiently distribute capital to those investments. But as we have seen in Western banking systems, these can also destroy value. And that's some of the challenges that you're seeing in Europe, where as banks try to scale back, as the governments try to make them less risky, they are pulling money out of the real economy. And that's actually hurting growth. So then we get to the markets in terms of Islamic finance and Islamic capital markets. And I came across a very interesting study which basically said that a 30% growth in equity and debt markets led to a 20% growth in the long term in terms of GDP per capita. So growth of capital markets was improving the wealth of society as a whole. Now, what was also very interesting is that it said if the growth was just in equity markets, that 30% growth in equity markets also led to a 30% growth in GDP per capita. So why is that relevant for Islamic capital markets? Well, what is it that equity markets are about? Equity markets are about risk sharing. They're non-interest bearing. It's about a share of businesses, a share in the real economy. Now, does that sound familiar? Of course. These are principles that underpin Islamic finance. And so those Sharia-driven principles of risk sharing, non-interest bearing, asset backing, social investment are actually shown in certain studies to actually generate more wealth, more economic growth than debt finance. And so the reasons for pursuing Islamic capital markets are objective. It's not necessarily religious or emotional, which are very important reasons, but indeed economic analytical data supports the fact that a more equity-driven system actually generates more wealth. So then we get to the fact that we look at where Islamic finance is today. And Islamic finance at the moment, as alluded to already, replicates a lot of conventional finance. The banks are very similar to conventional banks. The Sukuk market is very similar to the bond market. So in that sense, it replicates both the strengths and the weaknesses of those markets rather than focusing on what's different. And that's where I think the foundation that we have today, we can be very proud of. Islamic finance is a global phenomena. People are aware, investors are aware, even non-Muslim countries are aware about the presence of Islamic finance. But rather than focusing on making it as similar as possible, which is useful because investors, retail depositors sometimes don't like the unfamiliar. They like to go with things that they know, and they're not maybe ready for an investment type of approach that Islamic finance favors. And in this regard, once again, Malaysia tends to take the lead with its Islamic Financial Services Act, has made very clear the distinction between deposits and investment accounts. So this should encourage more of the savings, more of the cash to go towards investment purposes rather than just sitting as deposits in a bank. But we have to be aware that most of us, including you in the audience, when you put your money in a bank, you actually want it to be safe. You actually don't, at the end of the year, want to have lost money on your savings because it was invested. But this takes a change in awareness, a change in thinking that at least now in Malaysia, the difference between the two accounts allows the market to choose in that regard. So that's in terms of the retail banking proposition. To move towards a more Islamic model, you need more investment type of activity. But also on the Sukuk side, at the moment, most of the Sukuk market replicates the bond market. Slowly, we're getting to a more appreciation about the social purposes of Sukuk, whereby I'm very excited about the potential World Bank Sukuk, where they will raise funding, in particular, for an immunization program. So this is a Sukuk that, if it's executed, I think, either this year or early next year, the money will go towards a socially responsible purpose of immunizing and providing vaccines to those that need it. And I can think as an investor, I might be actually willing to accept a lower rate of return or a lower rate of profit if I know that the money is going towards a purpose that is genuinely helping people. And that's the way that I think the Sukuk market needs to go. There's always the controversy between asset-backed and asset-based Sukuk. Again, the market at the moment prefers and demands asset-based Sukuk. But with more awareness and more education, asset-backed Sukuk, where the financing goes against tangible investments, would also, I think, gain traction. I think just to sort of close off my comments is just to emphasize that we should be very proud of the achievements of Islamic finance. We have an Islamic banking sector that is growing generally faster than conventional. We have a Sukuk market that is also growing very fast. And we've seen the governments of the UK, Luxembourg, South Africa, Hong Kong all participate in this market, which means it's generally becoming a global phenomenon. But to take Islamic finance to the next level, it really needs to focus on what makes it different to add value. Just replicating what is already out there actually doesn't really, in my view, add much to the global system. So, inshallah, I mean, this is a journey and we're starting from a good foundation, but I hope in the coming weeks, months and years that with good regulation, good top-down direction, that we can take Islamic finance into this direction. Thank you very much.
Thank you very much, Khalid. Some fascinating insights there. I would now like to invite Zainal Islam to make his opening remarks.
Bismillahirrahmanirrahim. Assalamu alaikum warahmatullahi ta'ala wabarakatuh. Good morning, ladies and gentlemen, excellencies, distinguished guests. First of all, I'd like to thank WIEF and the Dubai Chamber for inviting me to speak this morning. Just to go straight into a few slides to share with you. Essentially, on the first slide, just to give you a bit of flavor of where the forecast growth drivers would be based on several studies. And you can see that the expected GDP growth in the OIC countries over the next 5 years would be higher on average relative to the more developed markets. And what this means is that there is tremendous potential for the Islamic capital market to grow in these economies as a basic foundation for future growth. But this is not to suggest that the ICM or Islamic capital market is only useful in the OIC countries, but also in other markets, as we have seen developments in the non-Muslim countries, non-OIC countries have also been very fast in respect of Islamic finance. And then just a quick data on the global sukuk market. For the last 10 or 11 years, growth has been tremendous, about 21.6%. with a value outstanding at the end of the first half of this year at $286 billion US, with debut issuances, as we have heard throughout the conference the last few days. 4 non-Muslim countries have issued sovereign sukuk this year, and it also adds to the diversity in the sukuk market, not only in terms of the countries, but also currencies in terms of the sectors and the target investors. As you can see, very quickly, for last year and this year, the sovereign issuances still dominate in terms of the value, but on the non-sovereign side, you can see that financial services have actually picked up from accounting for 10% in last year to about 23.5% for the first quarter of this year. And this has been, in part, attributed to further innovation in the market, with sukuk being issued to support requirements under Basel III for capital raising purposes for financial institutions. And we have also seen other issuances in various other sectors across the various jurisdictions, which adds to the diversity. So this shows what are some of the value proposition of sukuk. I think generally between sukuk and bond, as we have heard, there are some similarities there, but where sukuk adds further value relative to bonds is in terms of the broader investor base that sukuk offers. In addition to the conventional investors, sukuk also appeals to a global investor that includes the Sharia-compliant investors. This also enhances inclusiveness, where it allows investors who seek Sharia-compliant financing to also participate in the economic growth of a country through investments in sukuk, either directly or indirectly. They can, in some countries, in Malaysia, for example, retail sukuk are being offered and listed on the exchange for retail investors to participate in sukuk. In addition, funds that invest in sukuk are also widely available throughout the region and globally, in fact. In addition, the role of sukuk is also to facilitate and contribute to the development and growth of the halal economy. For capital expenditure and expansion of the halal economy can be very well financed through the issuances of sukuk. And in addition, the SRI segment or ESG segment, I think there are a few acronyms that addresses similar contexts where socially responsible investing are being favored, are being preferred, and we know that principles of Islam or Sharia tie in very closely with some of the principles on the SRI and ESG. And last but not least, the options that Sukuk provide in terms of broadening the funding opportunities for corporates to raise financing allows them to diversify their funding sources as well as reduces concentration risk in the market, and thereby helping for more financial stability in the economy. Just to share with you some trend in the Malaysian Sukuk market, I think if you can focus on the first column, where the percentage of Sukuk issued in Malaysia relative to total bonds, which includes Sukuk and the conventional bonds, we can see an increase in the proportion of Sukuk that have been issued out of Malaysia relative to the total bond market. And we believe this trend will continue, and it reflects the value proposition that Sukuk offered, which I've sort of briefly highlighted earlier, where it's recognized that apart from raising financing, being able to tap on the wider investor base as well as the firmer asset base or asset-backed features of Sukuk has added value to a lot of investors, which has also attracted issuers to issue more Sukuk rather than bonds in recent years, at least in the Malaysian context. And what does it really mean in dollars and cents for issuers? This is a comparison between Sukuk and bond yields in Malaysia. And typically, for the corporates, if we could focus on the AA and the A ratings, you can see that the yield, and the yield matrix, Sukuk does offer more attractive yield for the issuers. And this is partly because of the efficiency in the market, given that the volume of Sukuk is quite large in Malaysia, as well as the fact that there are many, a wider base, investor base that seeks Sukuk as opposed to bonds in Malaysia, and you can see that this is being reflected in a more attractive yield for corporates who issue, and therefore more efficient allocation of resources to drive the economy. And if I could just very quickly go to Sharia compliant equities, which has been highlighted earlier by my colleague on the panel. You can see that the sectors on the right-hand side represents all the sectors that Sharia investors can invest in. We are not short of opportunities to invest in Sharia-compliant equities, and tying that with the findings of the study which was mentioned earlier, that equities do drive stronger economic growth or have a larger effect on economic growth. I think this augurs well for the future of Islamic capital market. And the global Islamic funds typically in the same trend, although the growth has not been as spectacular as Sukuk, but it has been gradual. And this contributes, again, similarly to the ability of investors to seek more options in the fundraising and fund investment objectives, both for the issuers as well as for the investors. And I think to wrap this up, one of the comments that we sometimes hear in the market is that Sukuk has sort of dominated the Islamic capital market, and that is used for funding by the larger corporations. But I think there have been efforts that have been put in place to facilitate more fundraising and make available funding for small and medium enterprises. And I think the growth of private equity and venture capital segment, while it has been quite nascent for now, we believe there's a lot of initiatives are being undertaken to drive this segment of the Islamic capital market to promote more growth and opportunities for the small and medium enterprises. And on the part of Securities Commission in Malaysia, we are working on issuing a regulatory framework for equity crowdfunding, which again provides a platform for the smaller industries and startups to tap on financing, including Islamic fundraising. With that, I'd like to just close off the session. And I do have a couple more slides, which I'll cover perhaps during the question and answer session. Thank you very much.
Thank you very much, Zainal. I would now like to invite Dr. Alberto to come and make his opening remarks.
السلام عليكم ورحمة الله تعالى وبركاته والصلاة والسلام على سيدنا محمد وعلى آله وأصحابه أجمعين. Let me share with you my happiness to be back in Dubai and hosted by this meeting hosted by the government of Dubai and WEF. And it's always embarrassing to speak after Abdullah, Khalid and Zainal because they says it all. So I'm not sure what I can add to your presentations. Maybe I'd like to, in the next few minutes, to share with you my personal experience on the importance of capital markets, Islamic capital markets. In the last 5 years, we've been working in Russia, Central Russia, Palestine, and nowadays, for the last couple of years, in Afghanistan, on Islamic finance. In Russia, we work in one of the republics in Central Russia called Tatarstan, and the capital city is Kazan, where we structured and developed the first Islamic capital market instrument, not a sukuk, but a banking, a syndicated financing, ever done in Russia. Then we moved, and there it was very interesting because this is a country where 50% of the population is Muslims, and where there was a pent-up demand for SME Ijara financing. The regulators did not accommodate those transactions, but for whatever reason, the Central Bank of Moscow closed both eyes and allowed us to issue this instrument. That was actually sold here in the Gulf with great success. This told us of the importance of having a regulatory framework in place, but also at the same time of the possibilities of working outside, at least for a time, outside the regulatory framework. Then we had a totally different experience where we moved to, for a length of time, to Ramallah. There we had a mandate from the two Islamic banks in the West Bank to develop musharaka mutanaqisa, to allow the local residents to buy houses Islamically. We developed these things. And unfortunately, the process was stopped by lack of funding. We thought that a nice funding would have been to issue a sukuk. Unfortunately, there is no central bank recognized as such in Palestine, so we couldn't issue we couldn't create a funding instrument. Then for the last 2.5 years, we've been working in Afghanistan, in Kabul and in the countryside, providing Islamic finance to rural communities. There as well, we need instruments, capital market instruments, to increase in the funding of a number of products that we have developed. This experience, in different jurisdictions, some Muslim, some not Muslims, told us two things that I want to share with you now, and those are open questions that I throw to the distinguished panelists and to the audience. The first one, when we say development, what do we mean exactly? Is there an Islamic way to develop a country? Is there are there Islamic infrastructures? Is there an Islamic way to put people together, to interconnect people? When I read history and I see at the highest point of Islamic history, the Abbasid or Ottoman empires, I see that there was Islamic urban planning, for example, and there was Islamic Handasa architecture. So I wonder whether our capital market instruments today should not only be based on structures, but also value-based. This, of course, is a open question. The second question I wanted to throw to the audience is that do we need the capital market Islamic capital market as it stands today? Islamic capital market today is mimicking the conventional. Yes, we have structures, mode of financing that are Sharia compliant, but the value chain is the same. We have a bank, we have intermediaries, and we have the market. But Sukuk are not a debt instrument, let's face it, not at all. They are an equity instrument. So by aping a debt relation, a conventional debt relation, and apply this to an equity instrument, I'm not sure we do a good service. Furthermore, the very idea of banks is totally alien to Islamic culture. We don't have banks in Islamic cultures. We have Rab al-Mal, and we have people that need money. And this brings me to my last point. Do we need the intermediaries? Should we go and disintermediate the process of the capital market? In the Western jurisdictions, we have a very successful tool which is called crowdfunding. Last year in the EU, for example, more than 500,000 projects were crowd-funded for €1 billion. Should we, when I see the definition of crowdfunding, I see that it's totally Sharia compliant. It's sharing responsibilities, is building of civil society, is sharing risk, is local development. So I wonder whether we should move in the Islamic capital market for crowdfunding to Ummah funding and create projects that are locally sustainable and sustained by local communities. Those, of course, are questions open to discussions, and I'm looking forward to proceed further. Thank you so much.
Thank you very much, Dr. Alberto. Now, finally, I would like to call the last panelist. Richard, if you could come and make your opening presentation.
Good morning, Excellencies, ladies and gentlemen. Thank you very much to the organisers, both the Dubai Chamber and the WIEF, for inviting me. I've had a marvellous 5 days in Dubai, and the time spent at WIEF has been particularly productive for me. My history in Islamic finance, as most people here will know, is around 35 years. And over that period of time, we see great shifts and changes of direction, and I get used to seeing new trends and expecting new directions. And the clear picture that I have discovered at WIEF is that a theoretical construct that I've been researching from an economics perspective is just happening to us in the real world today. There is a big shift and trend in Islamic finance and Islamic economics, which is happening to us as we speak. And it's dramatic, and it is very exciting. And the references made by previous speakers on this panel to the crowdfunding aspect of that are demonstrably the evidence of this shift, which is a broader economic shift, both in conventional and Islamic economics. The title of my presentation is really looking towards Islamic equity capital markets. I don't want to rehearse the discussion about what may or may not be wrong with debt capital markets in a conventional or an Islamic context. I think we've seen the damage that mismanagement of debt has done to the global economy. And I think it is self-evident that an equity-based system would be a valuable part of an Islamic economic construct. But the Islamic or the equity-based systems in the conventional markets have been badly biased or badly prejudiced against by preferences towards debt. And those preferences are expressed through the taxation system and they're expressed through the accounting system. So equity from an accounting and equity from a taxation perspective is more expensive than debt. So debt proliferates. The development of an equity capital market and a broader Islamic economy can only succeed when that prejudice against equity is removed. It's very hard for an Islamic bank to compete against a conventional bank, and it is very difficult for an Islamic bank not to dress itself up in the clothes of conventional finance because tax and accounting is against them. So that's a fact. But we are seeing a big change, and I only have 2 slides, and I'm not sure if I can... There we go. I'm not sure that they will take very long to run through. In the United Kingdom, these 2 slides that I picked out are based on shifts in the conventional market in the UK. In the United Kingdom, Her Majesty's Treasury, completely independently of the work that they're doing on Islamic markets, have had 2 recent announcements which I found particularly significant, but I also found buried in amongst other work that they're doing. 2 things, really. One was the work that the Treasury is doing, which has been seized upon and also championed by the opposition party Shadow Chancellor, so it has multi-party support, is for the review and establishment of ACE products, or alternative corporate equity products. And what's particularly interesting about this is that the Treasury paper says that the government and the Treasury must equalise more effectively the balance between equity and debt. So they are, if you like, as an Islamic banker or an Islamic economist, stealing my clothes, as I feel that we should be in that position. And alternative corporate equity, or ACE products, are incentivised alternative equity raising vehicles which have failed in the past in Italy and in other markets because they are the equalisation has come through the taxation system. Basically, the government, if it allows these products, faces a lower tax receipt. It will be unable to raise as much tax, and so there has been disincentivised. But I think in the Islamic economies, in the Middle East and Southeast Asia, I don't think those obstacles exist, and I would call upon those in the Treasury departments and economics departments in the Islamic economies to look at and think about alternative corporate or ACE instruments as equity instruments for either conventionally or specifically for Islamic companies. The second issue is that I also found a note by Her Majesty's Treasury saying that having been against crowdfunding since the beginning and against peer-to-peer lending because of the fear of systemic risks and poor risk management and fraud, they've now reversed their opinion and they are now for crowdfunding as an alternative method of finance for business in the United Kingdom. And they are working as is the Malaysian Securities Commission, on creating safe haven environment for crowdfunding in the UK. The cynics would say that this is to do with keeping interest rates low through alternative sources of finance to bank funding, which is less available, and that it is manipulation of the capital markets. But the statement in the Treasury, which I found most interesting, was that one of the reasons why they like crowdfunding now is because crowdfunders would apply equity-like risk assessments to either equity or debt crowdfunding methodologies and would be more robust, and that the reward being paid is going to allow the citizens to share in economic development. So in terms of transference of transferring the benefits of society and drawing more out of poverty, it is a better route to achieving income equalisation and wealth distribution than putting your money in a bank deposit, which for a Western treasury is a remarkable set of... you put those two statements together from Her Majesty's Treasury, and they represent a fundamental shift in basic conventional economic policy. And that is a shift which the Islamic market should be picking up. But when I came to this conference, I thought I had some unique ideas here. Every session I've been to, whether it's been entrepreneurial or a panel session like this, talked about crowdfunding, talked about these equity models. And it's happening. It is just happening today. And those products are in the markets, and this will fundamentally change Islamic finance day to day. I have to just thank, to close up, I have to thank my good friends at INCF in Malaysia for their access through to their economists and academicians, because I'm just about 10% into my study of these two markets, and I wouldn't have got anywhere in my research without the INCF economists to support my work. So thank you, everybody. I hope that left you with some ideas, and I do challenge to have both the ACE instruments and the development of crowdfunding based on applied Gara and applied Jihala principles. I guess that's the last point that I wanted to make, although I've run out of time, is that risk management in Islamic finance is different, but sadly not applied. It would be better if both the Sharia scholarly councils and the risk management teams in Islamic banks and Islamic institutions were to have specific and defined terms of analysis and metrics for Gara and for Jihala, and by applying those and signing off that these elements don't exist in a contract, you will be able to overcome the concerns about fraud and mismanagement in crowdfunding, which I think is the barrier for many regulators. Thank you very much.
Thank you very much, Richard. Ladies and gentlemen, I would now like to open the panel discussion. And Abdullah, if I could start with you. You are the head of the in Dubai Islamic Economy Development Center, and you have been tasked with a huge mandate to deliver on the initiative of establishing Dubai as the capital of Islamic economy. And under that mandate, you have multiple sectors to look at. So you look at halal food, family-friendly travel, you look at Islamic fashion, pharmaceuticals, cosmetics, etc. What I wanted to understand from you was Islamic finance, and specifically Islamic capital markets, is something that cuts across these sectors, and it's something that has been stated in the past that will be utilized for the development of all sectors. How does Dubai envision developing the Islamic capital markets, specifically focusing on these sectors to help develop them? And what are some of the initiatives that are being taken to deliver on that?
Thank you, Mustafa. You rightly mentioned, our view of the Islamic finance sector is that it's the fueling sector for the real economy. The strategy that we have developed understands and takes that point very clearly. In our efforts to develop the Islamic finance sector, we would try to launch initiatives that would create, similar to the concepts that my fellow panelists revealed earlier, that would create a value add in development of the real economy. So whether it's the sukuk development, other financial instruments development, there has to be an impact that will have to be seen in the greater economy. Some of the efforts that we have put in place to develop the Islamic finance sector included the promotion of the sukuk instruments as a means to develop economies. Within that space, Dubai launched an initiative called the Dubai Global Sukuk Center, where we, and some of you might have already heard this, where we'd like to position the stock exchanges as a leading jurisdiction for the listing of sukuk. The good news is that there has been a lot of interest on utilizing sukuk instruments, both regionally as well as internationally, and both from what I would refer to as Muslim jurisdictions and non-Muslim jurisdictions. And so there has been growth in the stock exchanges last year when the initiative was announced, specifically around March 2013. The value of listings were $9 billion US. Today it stands above $22 billion US. So certainly the interest is there. But I wanted to emphasize on the note that Islamic finance instruments and the whole concept of Sharia principles takes the point of view that there has to be a good, I would say, impact on society and the economy. And this ties very well with recent trends that we have seen internationally in terms of ethical, investing from Western, jurisdictions as well. So I think there is a very similar value proposition that exists within Islamic finance today, and we should take a note of that.
Thank you very much, Abdullah. Khalid, I'd now like to turn to you. And in your presentation, you talked about financial stability as being key resource, and you represent an institution that's constantly reviewing the risk profiles of jurisdictions and institutions. But given the state of Islamic capital markets as it is today, product innovation is a key requirement for its development. Do you see a trade-off between promoting financial stability versus product innovation? Or do you feel that, as many analysts feel, that as the capital markets evolve towards more equity-based instruments, that financial stability will be promoted with that development itself?
Thank you. Well, if I take the Islamic banks, which we rate and which we analyze, a lot of the issues with Islamic banks comes from this tension that we've already highlighted between the equity type principles that in theory would make institutions safer because everybody's sharing the risk, versus bank type principles. And as Alberto mentioned, there's a bit of an inherent contradiction there. And I think this is where regulation can also come in, and not just product innovation, where the regulation needs to address the practice of Islamic banks and not necessarily the theory. So many people in the audience will be familiar with profit-sharing investment accounts and how in theory the risk of the assets is meant to be transferred to those investment account holders. Now that in theory would make the bank less risky for its creditors and more stable, so going back to financial system stability. But the fact is there's a difference between the practice and the actual theory, and in some ways this makes them more risky. And it's unfortunate that if you actually look at some of the Islamic banks in the Gulf, they tended to have some of the biggest asset quality problems because real estate, sort of equity type investments have made them more volatile. And if they were actually to try to pass on some of that risk to their account holders, there would be serious problems at that bank, because then those people would withdraw their money, and then you would potentially have a very destabilized financial system. So I think more than sort of product innovation, there needs to be a better regulatory awareness about the practice of what's happening at Islamic banks versus the theory, and address the practice.
Now, you raise a very interesting point, and we've had many discussions about similar issues where the principle versus the practice, and very often Islamic banks come back to analysts like ourselves and say that they're only delivering what their deposit holders demand. The deposit holders are not ready to absorb risk from their instruments. So if we want to move towards these principles, is it you think the Islamic banks that need to take a lead versus the depositors that need maybe more customer awareness, or is it the regulator that needs to try and drive this?
I actually think the top-down, the regulatory approach, and this is where, again, Malaysia, because at the moment, the customer can't actually differentiate between what is a deposit-type structure and what is an investment account. The term profit-sharing investment account is used very loosely. Whereas in Malaysia, they're forcing a distinct segregation so that a customer, he can choose or she can choose whether to go with a deposit-type safe structure, or those who are willing to take more of a type investment risk can go for the investment account. And there'll be a big red sticker that says, look, this is an investment account, you can lose money here. But at least by having that transparency, you give the power of choice to the market, to the customer, to say, okay, I want to go in this direction, or I want to go there. And that really has come from the Malaysian authorities to make it very clear. And then that will help separate who is driving that. Because as you say, customers aren't really ready in most instances to take risk on their savings. But some are happy to if it gives them a better return. And as alluded to, a more equity type of structure should share the gains of the wealth creation more equitably through society, rather than just sort of, the 1%, the 99%, this type of phenomenon.
Thank you very much. I think that's very insightful. And, Malaysia being one of the leading economies, the rest of the industry takes a lot from the Malaysian experience as well. And I hope this is another one that they would probably adopt. Zainal, if I can come to you. Malaysia probably has the most developed Islamic capital markets of any Islamic market. And, Malaysia has very, very proactively pushed Sukuk as the key instrument around which this sector is built. But very recently, there have been developments where we've heard from the government of Malaysia saying that they will be providing tax incentives for certain types of sukuks going forward. And those are sukuks that are more acceptable to the wider Islamic markets in GCC and other areas. So what I wanted to ask you is, how has the experience of Islamic capital markets in Malaysia helped in recent years to develop economic development? And how important is this international acceptability and cooperation for that development going forward?
Okay, thank you. I think the development of Islamic capital market in Malaysia has been driven very much by the government, a top-down approach, and it had been introduced initially to cater to the domestic requirements and domestic demand. And I think some of you may have heard of the pilgrimage board, which is the Tabung Haji, being one of the early institutional investors that helped to stimulate some of this demand for capital market or investment products that are Sharia compliant. Subsequently, with all the developments that have taken place, and also the opportunity that we see, not the demand and the supply, not just coming in from the domestic sector, but also regionally and more recently internationally, globally. So what we have done, or the government has done together with the regulators, is to create a comprehensive ecosystem that supports the development of the Islamic capital market. All the key components of the ecosystem, starting from the regulatory framework which we have put in place for the Islamic capital market. Our central bank has put a similar framework for the Islamic banking and takaful market. We look at the products and players. We have encouraged innovation. Sukuk, various types of sukuk have been introduced out of Malaysia by some of our investment banks and structurers. We have also, from a regulatory perspective, encouraged Islamic fund management to flourish by introducing a specific license, a special license, which is the Islamic fund management license. Currently, we have issued 19 such licenses for both foreign-owned as well as domestic-owned fund management companies to operate and offer purely Sharia-compliant fund management services. In addition to other components of such as you mentioned tax. I think tax is an important aspect in developing or facilitating the development of the Islamic capital market, particularly for sukuk, as we know that because of the sukuk transaction there are tax implications if there is no tax neutrality mechanism. And this was one of the earlier legal or regulatory and tax introduction that was put in place in Malaysia to facilitate the growth of our Islamic capital market, particularly sukuk. The incentives which you mentioned has been in place for a number of years. We continually review the incentives that has been given in order to focus on segments of the Islamic capital market that we believe has strong potential to grow but may need some incentives for the industry to push the growth in those segments. But these incentives are all temporary incentives which are meant to help kickstart the segment. But the tax neutrality aspect is something that has been put in place on a permanent basis. This also helps in terms of attracting international players to use Malaysia as an issuing hub because of the capabilities of the advisors, the structurers, the availability of Sharia advisors in Malaysia, for example. And this leads, if I could very quickly go to our focus now, and you asked about the international aspect. We released our Capital Market Master Plan 2 in 2011, where for the Islamic capital market, we recognize that the further internationalization of the Islamic capital market is critical, not just for the Malaysian Islamic capital market, but for the global Islamic capital market to develop further. And therefore, the building acceptability, gaining more harmonization, I think are key aspects in getting more international flavor to the Islamic capital market as a whole.
Thank you very much. Dr. Alberto, moving from Malaysia to some of the true frontier Islamic markets. I mean, you've worked in Afghanistan, Palestine, Russia, relatively simplistic Islamic capital markets with very few instruments and transactions, if any. What has been your experience? And more specifically, do you need to really wait till the financial sector develops, or can you take some of the examples that have been put in place by institutions like Malaysia, like UAE, to fast track the development of Islamic capital markets and to learn from their examples to develop more quickly in these regions?
Thank you. I thank you for the question. I think a game is over, and I think those markets are more developed than some markets that are thought to be Islamically developed. I totally agree with Richard Thomas' comments. What is happening in the market, it's different from what the news are reporting or the conventional Islamic thought is thinking is happening. Ummah funding, crowdfunding, Islamically, is happening very much in Palestine. It's happening very much in Afghanistan. And we heard it's happening now, not for Islamic reasons, but for other reasons in the UK as well. Last year, downtown Paris, an Islamic instrument was issued to raise a very tiny amount of money, 650,000 euros, to locally finance a halal restaurant. You don't need regulators, you don't need the Central Bank of France, you know these two things. It happened. And this Islamic instrument, totally Islamic, was financed by local people, some Muslims, most of them Muslims, some not. They like the idea, they like to develop this halal restaurants that is evolving, alhamdulillah, now in France as a chain of restaurants, as a countrywide chain. So I think that the trend is set. The trend is set, you know. But again, it's nothing new. Back in the 17th century in Europe, we had an instrument called the pre-numeration, which was a way to raise capital for publishing houses that wanted to print books, but they didn't have money. So they pre-numerated, you know, they raised money in this way. In New York, the Statue of Liberty, the basement of the Statue of Liberty was crowdfunded, 50%. They needed $300,000. They raised through conventional market $150,000, and the balance, 50%, was crowdfunded. So I think that you know, when I'm reading the features of crowdfunding, is a civil society, is local commitment, it's wanting to share the results, you know, of the economic investment endeavor. Those things don't need to be Shariatized or Islamized. They are totally Sharia compliant. You know, this is where we should really go. Comes to Dubai, we have a small crowdfunding venture here, launched, I think, last year. They're just financing films. Very small one. But go to Abu Dhabi, we have now a larger crowdfunding initiatives that is developing quite well based on real estate. And this is absolutely using Sharia-compliant investment structures. And this is Ummah funding, I would say, you know. The beauty of crowdfunding, of equity funding, is that it does fit very well with the Islamic concept. You can have crowdfunded for a debt instrument, you know, like Murabaha, if your appetite is for Murabaha. You can have instruments for a more risky, more reward instrument. And so you can differentiate in your customer base. And of course, you can have crowdfunding for a project, you know, that is shared by the community, can be a local community, can be a domestic, can be a national community. So I think that we, the Islamic finance fraternity, should look at, you know, start looking, you know, a little bit more far-sighted.
No, thank you very much. That's a very interesting point. I mean, I think most of us are usually used to thinking of capital markets as something that, you know, it starts with the larger players, and as it develops, it gets access to the smaller investors or ordinary individuals. But it's very refreshing to see that even in developing markets, there is this move to utilize crowdfunding and equity funding.
Alayhi salatu wasalam said, and there are a lot of hadiths on this point, always start everything you do from the bottom, not from the top.
From the bottom, yes.
This is a hadith of the Prophet.
Please go ahead.
If I could just very quickly share equity crowdfunding, or other crowdfunding in Malaysia, for the Malaysians in the audience. At least one of the more visible ones happened in 1982 for the World Cup finals. At the time, when with budget constraints, the TV could only show a few live telecasts of the matches that took place in the World Cup. And one of the media organizations actually started a fund where all the Malaysians contributed to the fund. And alhamdulillah, I think we managed to see probably 6 or 7 additional live matches because of that crowdfunding.
That's very fascinating. I'm sure a very popular initiative as well in Malaysia. Richard, just coming on to yourself, we heard, you know, about sukuks and the larger sukuks. We heard about crowdfunding. And, you know, we usually envision these as, you know, the larger institutions raising money through sukuks with rating systems and everything else in place. We consider smaller initiatives raising money through crowdfunding and that. In your experience, both in developed markets and emerging markets, how do you see the middle, which are not the large corporates, but not the very small initiatives, the SMEs, the true medium SMEs, which are the backbone of the economy in most countries? How do you see them? Can it be a combination of these two, or is there a third type of structure that needs to be developed to target these segment?
I participated in the midterm review by IDB and IRTI of the long-term project for Islamic finance. And it highlighted the strengths and successes, and it also highlighted the threats to Islamic finance. And the two highest levels of threat identified were trust and relevance. So the fear that the man in the street would not trust the Islamic finance instruments actually to be Islamic, and that they would also become irrelevant to corporates and individuals, that Islamic finance would not be providing them with the products and services actually that were important for them. And a big sector in that is exactly this sector. It's the medium-sized enterprises, the smaller and medium-sized enterprises, not the emerging or new enterprises. And we had a very interesting session last night with NCF and the guys on entrepreneurialism, which is a separate but very interesting subject. The significance, I think, of this is that in both conventional and Islamic markets in the West and in the East, people are turning to alternative sources of capital. Crowdfunding is one iteration. I mean, it is the current favourite word to use, but peer-to-peer lending or alternative non-bank financial institutions are providing, and private equity is returning, pure, straightforward private equity funds are returning to the table after really 10 years of absence. They're becoming very popular again. And these alternative sources of, in many cases unregulated, but in some cases regulated products, are becoming much more relevant to the user. So for the man in the street or for the corporate, they are turning to these solutions, both for spending their money and borrowing their money, both for investing and for financing themselves. I mentioned crowdfunding. The other instrument that I mentioned, which I think is more nebulous, but I think in many ways more exciting from a purely capital markets perspective, is this concept of ACE. And these are products which provide what you might describe as a mezzanine equity type structure, but actually it is really just more efficient equity. And it does tap a little bit into this issue of, do you need government support for the development of this financial infrastructure or don't you? And in the context of products like ACE, or for example in the United Kingdom now, where we're looking at a discount house for Islamic banks, these products need fiscal management and therefore do need governments to be able to take a look at their fiscal policies and work out whether this is good or bad. But as Alberto says and I've said, these things are happening. And actually in Europe, the governments and the central banks are just catching up. Funding Circle in the UK is an Islamically compliant crowdfunding venture, which is very big. It's not small. It is not. These are not. Oh, it's a few people raising a few hundreds of thousands. These are hundreds of millions of pounds, and shortly to be billions of pounds worth of instruments. They're not somehow the in the garage type of operations. These are big and potentially systemically important organisations. So whatever the instruments, whether it's a crowdfunding instrument or whether it's ACE, these alternative instruments are coming, and they are going to serve this market, which is currently not being served either by conventional banks or in many cases Islamic banks. It will be these alternatives. And it is much more, in terms of trust and relevance, Alberto talks about the funding of the restaurant. You will not find that in that structure they needed somehow to buy and sell some metal on the London Metal Exchange to achieve that goal. It makes it much easier for people to understand. They don't have these structural, you just do it. What is that about, all this structure? Let's just put some money in and have some return and not worry about all of those things. So, it is the future.
No, that's very interesting.
Mustafa, can I add a comment on both Dr. Alberto's and Richard's remarks? Whilst I agree, crowdfunding, for example, is certainly the trend, and principles of which would tally well probably with Islamic values. That, in my opinion, also this doesn't remove the responsibility, from regulators and intermediate or companies, that should manage the whole process. And I think they would have a huge responsibility in making sure that the Ummah money is being spent, especially for the types of crowdfunding that involve equity and reward, based, not the voluntary type, but that are being spent in the right manner. And as a matter of fact, that the intention is achieved, the intentions of the Islamic, values that it aims for.
Sure. So, thank you, Abdullah. Alberto, I believe you want to respond. If you could be very...
All Western jurisdictions are passing regulations for the crowdfunding. The most advanced, I think, nowadays in Europe is Italy, but the US and Ireland are passing, Norway, Sweden. So there are, rules to be followed. And then, second thing, very interesting, is that there is strong inbuilt governance on the crowdfunding, because you don't give out money like this, There are different systems. We don't have time to go into these things, But there are systems where you give money only if the results are achieved. And certainly, is in all human endeavor, if there is no taqwa, you can regulate as much as you want, But we're talking about, there will be frauds, of course. But the direction is there, and provided taqwa is applied.
Thank you very much. Ladies and gentlemen, unfortunately, we have run out of time. So if you could please join me in thanking my fellow panelists for this very interesting discussion. And if you have any questions, if you would like to reach out to them, I'm sure they would be willing to spare a few minutes to address them.